Alright boys, welcome back to another video. I know it's been a minute, I've been working on so much different stuff. Today's video, pretty basic. If you already understand all the blocks, I'd still recommend watching just because I'm going to be dropping some little tips and stuff. Over the 4 years I've gained some experience, believe it or not. So what I'm going to be doing, just before I get started, I'll let you know that the Discord is down below in the description, completely free, hosting webinars all the time. You can submit your charts to me and I can review them. Give me YouTube recommendations. There's a free course, pretty much the best mentor out there, so do all of that stuff. But yeah, so pretty much what I'm going over is order blocks, you know, kind of how to validate order blocks and stuff. I'm not going to go too much into, like, in terms of structure, having the bias and, you know, alignment with the order block and stuff, because that's just going to be long. But in terms of just using the order blocks and, you know, the validation and stuff, that's what I'll go through, right? So now all the Discord stuff's been said, all the links down below in the description, by the way. How do you validate an order block, right? So actually no, what is an order block, right? Order block is a candle that kind of initiates a trend, a leg, right? So it holds a lot of volume, so it's a valuable order block. The majority of the point of interest, the majority of the trades you're going to be taking are going to be off of a type of order block. Not a type of order block, but a type of POI, which is an order block. So what does an order block look like, right? Order block is a candle, it's just one candle just before the intention, right? It's the intention, the expansion, the trend, whatever you want to call it. Just before that happens, you're going to have an order block. And sometimes you're going to have a little candle, which is called an IFC. I'm going to tell you what an IFC candle is, but I'm not going to recommend trading it just because sometimes you can miss some trades just because you're over refining, right? So the only time I'll ever use an IFC candle is if the order block is pretty much, you know, not that much bigger. So, you know, you're not really taking a risk. If the order block's like that big, then I'm not going to use the IFC because the likelihood of price pushing all the way down and tapping, you know, an IFC that's 1.5 pips big, it's not likely, right? So the order block is the main area. I'm only drawing two separate rectangles just to show you, you know, what's what. But if there's an IFC candle, I tend to just highlight the entire IFC as well as the order block. So if price comes below the order block level and still pushes into the IFC, it's still classed, you know, it's valid for it. There's a reason why it went below. So that's that. So the order block will look like that. And this is the 15-minute chart. So in every case, you've got to have liquidity before the order block, otherwise it's not valid. And it can't already be mitigated. So let's say there was no liquidity and this is a low, right? So let's say price, you know, price going up, down, mitigates the order block. Price comes down again into the order block. This is no longer valid. You're probably going to get a bit manipulation because, you know, people are going to be buying it. You know, the dumb smart money concept traders are going to be, I'm smart money concept, but I'm saying the retards of the smart money concepts are going to be buying, right? So with that being said, let's do that. So that's the 15-minute. So on the 1 minute, what we've done on the 15-minute, you know, identifying the liquidity, identifying the order block, you're going to be doing all of this stuff on the 1 minute as well. So you're going to repeat it again so that your win rate is a lot higher because you're not entering on the first tap. Because if you enter on the first tap, there's nothing stopping price just melting beneath, just in case you got, you know, the bias wrong. So in the 1 minute, what we're looking for, we're waiting for price to push in. So here is the first tap into the order block, right? So the first tap created some level, you know, we want to see that get broken. So price pushes a bit further, creating a low, pushing up. We get a bit of manipulation because obviously this is an order block, so, you know, the retards are going to be selling. And then we push up, taking the high. So we've broken structure, mark that out as an MS, so market shift. That's our market shift. Whereas our liquidity, it's going to be this previous low. So our order block or point of interest isn't going to be until after this liquidity has been swept. Order blocks here, wait for it to push into the newly formed order block, and then we look for buys. Right, pretty simple stuff. Study it, backtest it, revise it, research it, do everything you need. If you've got any questions, message me on Discord, Instagram, whatever. So how do we identify one? Again, so you can see price is coming up. Let's say we've come into a point of interest. We've got the last candle before the down move. That's our order block. Price pushes down, pulls back up into the order block, then you can look for sells. Here there's an order block. I drew this across because I recorded this video for the second time now, but because it's been mitigated again and it taps into it for the second time, all of these retards, sorry I've got to call them retards, stop. All of the dumb people are buying again, failed to break the high because there's no volume, there's no strength inside that order block. You know, it's already been taken from this tap, which is why we had this huge impulse. So yeah, we impulsed a bit. You might have, you know, if you closed over here, then yeah, fair enough, you caught a W. But if you're trying to catch the, you know, the trends, it's not going to hold. So yeah, that's that. Order block here. As you can see, we've got loads of different candles here. Which one do I choose? If we look at the 1 hour, I might be able to show you. Yeah, so the 1 hour, we've got the order block and we've got the IFC. Tend to highlight the whole thing because, like I said, 80% of the time probably doesn't actually tap the IFC, and there's no point trying to over refine just to get an extra 2 or 3 R just because you're a tight bitch. But yeah, I'm gonna leave that. That's all it is. Order block IFC, order block tap. You can get single candle order block, so you can get a huge impulse to the upside, right? Liquidity, and then sometimes, what the hell? Sometimes inside of the huge impulse, you can get one little candle that looks just like an order block. So a single candle order block, just like. Where did I find it? I swear I just had one. Okay, here. So obviously, don't forget we're on the 1 hour. That is a single candle order block there, because that's the original order block. Prices come up, come down, mitigated the order block inside of this order block, so it invalidates it, pushes up, pulls back into the new order block. So it's all about using the valid order block. It can't be mitigated. If it's mitigated, then it's not going to work, right? Maybe I'll show an example of mitigated order blocks. Let's jump down to the 5 minute quickly. Okay. No, I can't find an example. Plenty of examples in the Discord. I'm always putting stuff in there about it. Mitigated order blocks is one of my favourite trends, actually, to favourite entry concepts. I'm going to leave this video here. You like it, comment, subscribe, do what you want, join the Discord, and I'll see you boys in the next one.